This is the Telemetry Transportation Daily for June 20th, 2025, and I'm Sam Abuel-Samad, VP of Market Research for Telemetry. It's no secret there's been a major price war going on among EV manufacturers in China for at least a couple of years now. Despite the strong demand for new energy vehicles in the world's largest automotive market, manufacturers are battling for market share, and the vast majority of them are losing. The key to the problem is that too many companies have entered the space in recent years, including many new entries from the technology industry. Even in a market as large as China, where more than 27 million passenger vehicles were sold in 2024, there just aren't enough customers to keep all of the factories running. New data from the Gasgoo Automotive Research Institute in Shanghai indicates that while just over 31 million vehicles were produced in China last year, the combined production capacity of all the factories exceeds 55 million. Generally, it's considered that factories need to run at more than 85% capacity to be profitable, but the average utilization rate last year was just 49.5%, with a number of factories running in the low single digits. Thus, the price war and the push to export to as many markets as possible to use up that capacity. However, there is increasing pushback from other countries. The U.S. already has a 100% tariff on Chinese EVs, and China is proposing a minimum price pledge for its EVs if the European Commission drops its 35% tariff. That would have a similar effect on prices for consumers, while boosting the revenues and profitability of Chinese manufacturers by keeping the price premium for themselves instead of paying it to European treasuries. Chinese automakers, especially BYD, are also targeting Latin America. Almost 20% of sales in Mexico in 2024 were from Chinese brands, and sales in Brazil are expected to grow 40% this year to 200,000 units. Industry groups in the country are pushing for a rapid tariff increase from 10 to 35%. While Chinese automakers are looking at local production to get around trade barriers, that would do nothing to address the domestic utilization problem. The Chinese industry needs a major shakeout and dramatic industry reduction in automotive capacity. With a population that has already peaked and started to decline, China will never be able to absorb that many vehicles, and rationalization is needed if the industry is going to be financially sustainable and play well with the rest of the world. Thanks for listening.